Tuned into Editor's Roundtable. Well, Diagnostic stocks, they're close to the 52-week highs after the stellar rally we've seen from 52-week lows. What's aiding this upswing, Ekta? Tell us.
Well, yes, it seems as though the interest is now coming back into the entire diagnostic space. If you look at it, there's been a significant rally from the 52-week lows. For example, Dr. Lars Metropolis up anywhere between 40 to over 50-odd%. There is a lot of optimism now coming into these incumbent players, and the reason for that is basically the fear of steep price wars has eased from online diagnostic companies. For example, online aggregators are now saying that there is stabilization of pricing in routine tests, for example, thyroid, CBC, all of those tests. In fact, prices have risen 20 to 25% from lows seen in routine tests. Remember, there was steep discounting which was taking place at one point in time. The agenda now seems to be shifting to sustainable growth versus rapid testing growth. Now, what is helping the incumbents, such as, say, the likes of Dr. Lals, Metropolis, all of these? Realization that demand is inelastic. There is more focus on trust and quality names when it comes to testing. Overhang of margin dilution is now over because that's eased due to price competition easing. For example, Dr. Lal margins in FY24 were 27%, Metropolis 23.4%, Thyrocare 24%. Now, factors aiding margins is that the incumbents have managed to, in fact, raise prices in the past 1 to 2 years. There are higher margin packages also, such as, say, preventive testing, bundle testing. There's one person who comes to your house, takes your blood, and you do many tests with that particular sample. Your fixed costs are low, but the amount of revenue you're generating from that one test is higher. So that works. Now, for example, Dr. Lal's FY24 Swasthfit sales were up 32%, and Metropolis, their wellness packages were up around 23%. So there seems to be this narrative shifting. But Gautam, I just wanted to